All right, guys. AMD earnings today. Hey, what's up, Constantine? Hey, thanks, man. Yeah, AMD drops earnings today, guys. SPY break it down. We're at 384s here. After the breakdowns we got earlier in the day, it's been mostly neutral activity, kind of slight green rebound here. We'll see if we can continue. We got everything rolling. Good. AMD just broke under the previous closing price, under the $60 level. We do have earnings dropping today, so y'all be ready for that. AMD, Airbnb, Devon Energy, ET, Electronic Arts. Oh, we got EA earnings. We got MicroStrategy earnings today as well. That'll be fun to watch. EA earnings will be interesting too. Yeah, so we do have EA. Let me know what your predictions are. We're going to do our poll here as we always do. Yeah, so we do have EA. Let me know what your predictions. Y'all do me a favor, hit the like button while you're here. Hey, what's up, Bogdan? Hey, thank you, bro. I don't know, man. Tomorrow's the crazy day, bro. Today's interesting with AMD, but like tomorrow, the Fed rate hike, that's going to be big. Bullish or bearish on today's earnings, AMD earnings report. Right here, we'll just do AMD's. Yeah, bullish or bearish on AMD's earnings report and call. Bull or bear. Vote on the poll. We got this poll live now. We're also going to do a Twitter poll as we always do. So we're going to do a Twitter poll as we always do. Oh, wow, dude. Migos rapper Takeoff was fatally shot in Houston, dude. Wow. Rest in peace, man. That's sad. Wow. Rest in peace, man. That's sad. AMD bouncing back here. But yeah, thank you, Bogdan. Thank you, Spammer. Constantine. AMD did really well. Yeah, and it's really cheap right now, too. I mean, I think we're really cheap right now for AMD. Moving forward, maybe we'll get something good. We're gonna get ready to send our newsletter out, guys. Y'all be ready. Again, y'all join our newsletter. Here's our newsletter, completely free. We're gonna get ready to send that newsletter out today. Y'all be ready. We're gonna send it out. AMD drops earnings. We also have Airbnb and EA earnings today as well. They'll all be relevant, you know. And so we're gonna get ready to send those out as well. All right, guys. So again, we do have the AMD earnings report and call dropping pretty soon. AMD popping right up to that previous closing price here. Do me a favor as you join the stream, hit the subscribe button if you haven't already. We appreciate it. All right, we're sending our newsletter out now. We had a pretty good day. We made about $400 today. Again, join the newsletter, be a part of it. We send it out. What? Yeah, all good. All right, there we go. All right, so there we go. Yeah, latest newsletter just got sent out. Yeah, JP could take the market for sure tomorrow. We'll see if he does, man. I hope he doesn't. We'll see, though. All right, guys, we're at 59.90s for AMD, 59.90s. We also have Chegg today's chggchegg.com, online retailer. Yeah, I mean, all right, 59.80s for AMD. We're right at 59.80s. SPY at 384.80s. So how was trick-or-treating yesterday, guys? You do trick-or-treating? Wow. All right, guys. So again, AMD under 60 here. You can see my P&L today. We did pretty well. We made about 350 to 400. Again, our win-loss ratio today was 5. So we won for every 5 trades, we lost once, basically. We had a 5-to-1 ratio in terms of wins versus losses. For every 5 winning trades, we had 1 losing trade. And for every 1 losing trade, we had 5 winning trades. I made about $400 today. Built up a cushion, swung into it like we always do. Maybe swung a little bit too hard, took some added risk, but we did make a good little bit. Starting to reject a little bit of $60 for AMD. And again, let me know what you guys think we're going to get today. Let's do our Twitter poll. AMD drops earnings exactly at 4 p.m. It's scheduled at 4:05 p.m. actually for AMD. Calls or puts. AMD break it down, just broke lows. Hey, what up, CT? AMD puts. Let me see. So most people are bears. We got 61 votes. 41% are bullish. 59% are bearish. All right, guys, vote on the poll on Twitter as well. Calls or puts. We're gonna make this 4 hours long, maybe 3 hours long. On there we go. All right, guys. Again, vote on the Twitter poll. We just did our Twitter poll. Calls or puts on Twitter or on AMD. Today, we also have a few other things dropping. We got specifically Airbnb. It's at 108.60s. We got EA dropping earnings at 125.80s. 125.80s for EA. We also have Chegg, which is kind of a online tech site, retail tech retailer. We got Match.com, MTCH dropping earnings today at 44.20s right now. We've got Devon Energy. Of course, Airbnb. We got Clorox. We got Caesars Entertainment Gaming Company. A few other ones, but nothing real relevant, to be honest, aside from EA, Airbnb, AMD, MicroStrategy. I forgot about MicroStrategy. That is big. Bitcoin heavy, so this will influence cryptocurrencies for sure. So, yeah, we'll see if we get something good. All right, guys. So, again, we do see AMD consolidating towards these low levels here. MicroStrategy doesn't even make money. No. AMD puts. I'm not saying that. Again, what do you guys think? What we got today? Again, AMD numbers drop in about 15 minutes. A little bit slower today. I mean, usually today is going to be a smaller stream. What I am hoping for, though, is that we can potentially hit 90K today. We're getting close. My Astros are going to win today, guys. Remember, my Astros are going to win. I'm thinking AMD will do well. Yeah, AMD, I mean, if we look at the extension for AMD here, you know, extension, we're down pretty big on the year. Microchips have just gotten beat up over the last year. And so I think it's plausible to assume that we might get a rebound today. Certainly possible. Hopefully that's what we get. But who knows, man? Who knows what we're really going to get? I hope we get a rebound. But, you know, you never know for sure. And again, we'll see what happens. Looking at our poll numbers here, we did a few polls. 82 votes, bullish or bearish. 44% are bullish. 56% are bearish. We did our Twitter poll as well. All right, we got 24 votes already. 68 or 67% are saying puts. 33% are saying calls for AMD. We're right around 59.70s here too. Now it depends on how big of a reaction we get. If we get a big downward negative response, how has AMD performed over the last 10 days? AMD hasn't seen as big of gains as a lot of other stuff has over the last few days here. So AMD has not seen like a big rebound, like as opposed to like, here's a 10-day chart for AMD. Here's a 10-day chart for Apple. You know, Apple's up a little bit more here, like Microsoft. Microsoft has kind of gotten hit a little bit more, and understandably so. I mean, Microsoft is a little iffy right now. I think Nvidia done really well. So AMD's counterpart, Nvidia, done really, really well up to 135s. Now, again, if we look at AMD, AMD's still slightly green. It's not like it's red, but it's closer to break even here. So I still think if we get some big drops in AMD, we might have some extension to capitalize on the downside. Maybe, maybe not. It depends. I don't know if I'm going to buy things like I normally do, because right now with the Fed meeting tomorrow, it could get chaotic in markets. And so the only way I'll consider it is if we get like a big drop and I could buy it up and then just kind of patiently wait. But again, we do have EA numbers coming out today. EA is at 126 roughly right now, right around 126. We also have Airbnb numbers dropping today as well. Airbnb at 109s. We have EA, Airbnb, Chegg, Match.com, and MicroStrategy, which would be really interesting. MicroStrategy 129s. Expectational numbers for AMD are as follows. 55-cent per share profit is what the expectation is for AMD. We'll put this down. All right, will we beat or miss AMD numbers, guys? Let me know. All right, guys, and then AMD is even breaking down right now. It's at 59.70s here. Tomorrow's going to be a crazy day, though, man. We got the rate hike decision, man. Let me know what you guys are doing tomorrow. Like, are you guys planning on getting flat ahead of everything tomorrow? The expectational numbers at the bottom. I hope AMD does well. What's up, Tiny? Yeah, the Astros are a better team, CT. I mean, I'm an Astros fan. I'm in Houston, of course. Yeah, all good. Tiny? QCOM? Yeah. Had some good stuff dropping today. QCOM dropped recently, didn't they? Tomorrow, we got CBS, Progressive, Roku. We'll probably stream Roku and QCOM tomorrow. Let me see if I've streamed QCOM earnings before. It depends. Like, just QCOM alone, I'm not going to stream it. No, I think I streamed Roku last time. I might not have, though. I don't know how big it's going to be. We'll see. All right, AMD testing lows here, though, guys. Look at AMD, man. Wow. No, never did Roku. QCOM. eBay. MGM. I don't know if it's going to be worth it. I don't know if we're going to stream tomorrow. Robinhood earnings are tomorrow. That might be relevant. But I don't know how big Robinhood is. MGM, eBay, Etsy. Man, look at AMD break down here. Wow, AMD break it down. But yeah, tomorrow we don't really have anything big. I mean, we might cover Roku earnings. We could, but I'm not sure. Did we ever try? Yeah, tomorrow we got the Fed meeting, so it doesn't matter. All right, AMD breaking down, guys. Look at AMD, man. Down to 59.50s here. Hey, what's up, Tyler? AMD predictions. I hope we go up, man. Again, I really don't know. AMD hasn't had a huge green 10-day period or so. So AMD break it down now. If this is influencing extension for the earnings report, I'm not sure. We'll see. Report drops at 4:05 p.m. Eastern Standard Time. But look at AMD tank here. AMD's falling. Also, y'all do me a favor. Hit the like button. Let's try to break 100 likes if we can here real quick. Oops. We're at 59.50s for AMD here. MicroStrategy still breaking down. What's your favorite stock for earnings aside from AMD? I know most people are covering AMD today, but outside of AMD, we've got EA, MicroStrategy, we've got Chegg, we've got Match.com. That's really it. I think the biggest one's obviously AMD, and then maybe followed by this, we've got Airbnb, of course, is probably the next biggest one. It'll be relevant to pay attention to as well. Airbnb at 109. The expectational numbers for Airbnb are for $1.43 profit versus $2.85 in sales revenue expectations. So $1.43 in profit for EPS is what they're expecting. Of course, anything over that, and it'll probably go up. Anything under that, it'll probably drop. Same thing with the sales revenue. All right, guys, 7 minutes. Bears versus Bulls. Hey, what's up, Ricky? I'll trade after the Fed speaks tomorrow. Otherwise, we'll stay flat. Yeah, I don't think that's a bad idea, Michael. JP Hammer tomorrow. Yeah, man. We'll see. Hopefully, he says some positive things. A lot of people, I've talked to a lot of different people. A lot of people are expecting 50 basis points, which I just don't think is going to happen. I mean, I might be wildly wrong. I just don't think we're going to do 50. I think if we do anything, we're going to do 75. And so I think it's more likely that we're going to do 75 basis points. You know, I think it's just so much more likely that we're going to do 75. And so we could do 50. If we do, the market's going to fly. If we do 100, the market's going to tank short term. So here's my graph today. So this is my private graph today. All right, so you can see we traded 5 contracts, $400. Yesterday, we made 110, so kind of a small day yesterday. Day before that, so here's my P&L here. So again, here's today. We made about 400. Yesterday, we made about 110. The day before that, so today is the 1st. Yesterday was Wednesday. The day before that was Friday the 28th. So if we look at the 28th here, we made 140 on the 28th. On the 27th, which was Thursday of last week, we made 230. So we're actually on a pretty long green streak. 230 on the 28th or 27th. On the 26th, we made 280. Not bad. All right. You see our green streak here on the 27th. or 25th, I mean, we made 140. 24. So we've been green since Monday of last week. On Monday, we made 170. And this is pulled directly from my platform. It's not fakeable. Last losing day was Friday of the 21st was our last losing day. We lost about 330. It was a big losing day, but it was our last losing day here, which is fine. So yeah, it kind of shows how consistent we've been, man. We've been making money in futures. Again, futures market, easiest way to get around PDT. Simply the easiest way to get around the PDT rule. You know, no PDT restrictions. You can day trade short as much as you want. Yeah, we're going to cover Airbnb. We're going to cover EA. We're going to cover everything. So we all, just to put it into perspective, for these earnings streams, we usually have one stock that's the main theme. But outside of that, we still cover every other earnings report that drops here. So we're going to cover AMD at 4:05, Airbnb at 4:05. Electronic Arts drops right at 4 p.m. MicroStrategy drops right at 4 p.m. We got Caesars that drops at 4 p.m. Match.com drops at 4:15. And so we're going to cover all of those. Chegg drops at 4:05. So as we can, we're going to cover all of those. And so we're still going to cover all of them. But, you know, the main one and the one that we're going to stream the actual earnings call is going to be AMD, just because that's the biggest one. Adam, it doesn't matter. I mean, my channel's called Beginner Trading, and if you're really trying to, most of the time you can see I'm not making, most of the time I'm making like on average here. So like, again, let's look at our average gains, like with everything included, right? So today we made 400. Today we made 400. And I'm going to put it out. Really, I don't even need to justify it here. So today we made 400, right? So we're certainly not making $100 or less every day. That's a stretch. Number two is that I'm not claiming to be an expert. I'm not claiming to live off of my trading profits solely. And anybody that's green is doing better than 95% plus of traders. And if you don't think it's that way, then you're probably brainwashed, to be honest, because a lot of people are just out here buying courses for thousands of dollars, following these gurus who just want to sell them stuff. They're just trying to sell them courses. I'd rather not claim to be an expert and not have any type of pressure on me to trade. You know. Anyways, we got 3 minutes. Let's see what we get. AMD expectational numbers are, like I said, 55-cent profit here. They've gotten beat up over the last year. Sales revenue is at $5.58 billion. And so again, we'll see if we can break those numbers. We'll see what the guidance numbers are for AMD as well. Yeah, most gurus never even show their trades. Again, my whole thing is like, I'm not an expert. Look at the name of my channel, bro. You know, I also don't sell a course either. You know why? It's because I'm not claiming to be an expert. Like, I don't want that. Like, I'd rather just be like, yo, maybe I suck, you know, and nobody can tell me anything than out here trying to shill courses for $2,000 a course on publicly available content you can find on Google. I'd rather just give everything away for free. Yeah, we got sponsors. Like, yeah, we got affiliates. Yeah, you better believe we make money from all this too. And y'all would if y'all were me as well. I mean, everybody is doing this to make money. You know what I mean? Nobody's out here spending 6 hours a day streaming out of the kindness of their heart. Like, that's ridiculous. But we make money giving away things for free. And I think if there's a way to make money, that's the way. Anyways, less than a minute before 4 p.m. The only one that we really have dropping at 4 p.m. is EA. So EA drops their numbers at 4 p.m. on the dot. At least it's scheduled to. AMD is supposed to drop it at 4:05. And so again, we'll see if we get something good from these. I don't know how much these other ones are going to influence the market. Airbnb might influence real estate. But EA is going to be the biggest, most influential one for sure. We're also going to put it in sub-only mode, guys. So if you have not subscribed, subscribe now. We are in sub-only mode. Hit that subscribe button. I'd love to break 90K subscribers. We're pretty close to breaking it too. We need like 75 subscribers. So if we could break that today in this earnings stream, we got 200 plus people here. Hey, help us break that level. But yeah, we got AMD. We're going to be watching for EA numbers. They're supposed to drop shortly after the closing bell here, which is pretty soon. And so let's get ready, guys. All right, so there's 4 p.m. There's the closing bell, waiting for the EA numbers as well as the AMD numbers. Nothing yet right now. Nothing yet. Watching Airbnb, AMD on the right. Watching EA here to see if they drop yet. EA hasn't dropped anything yet. SPY moving up a little bit. Nothing out yet, guys, on these numbers. Airbnb, AMD, all that stuff. Nothing's out yet for them. Still waiting. MicroStrategy, nothing out yet. Again, we got Match.com. We can look for that one too. Nothing out for that yet. So, again, a lot of them are scheduled for 4:05 p.m. But I don't see anything drop yet. Here's AMD. AMD hasn't moved at all yet. Still waiting. AMD's scheduled specifically for 4:05 p.m. So right at 4:05 p.m. is when it's supposed to drop. Hey, later, Tiny. Have a good day. EA down by $7. Yeah, so EA looks like it might be out yet. I'm not seeing anything reflect yet, though. We're still waiting on that numbers to reflect here. They haven't dropped yet. Most of them cover. There's a EA pop. So EA did just drop their numbers. EA dropped third quarter EPS of 43 cents, which was noticeably lower than the $1.37 estimate for EA. So EA only dropped 43-cent EPS, so way worse than expected here. Look at EA, but Electronic Arts revenue came in. Yeah, so noticeably worse than expected for EA. Again, 43 cents per share, $1.9 billion in revenue. And so they were expecting 1.79 billion. So a little bit better in sales revenue for EA. Lower than expected EPS. Again, they dropped EPS of 43 cents per share, sales revenue of 1.9 billion. So noticeably worse than expected. You can see EA dropping all the way down to 120 here right now. 120 here right now. The other one we had dropping today at 4 was Caesars and MicroStrategy. We could watch that. Again, not really getting any reaction here, but there's the EA number. Again, we just kind of reported what EA was. EA came in at 43 cent profit for EPS versus 59 cent estimates. It looks like noticeably worse than expected. Higher sales revenue, though, for EA. So EA came in mixed, worse EPS, better sales revenue. AMD hasn't dropped yet. Still waiting for everything else to show up and reflect. EA reports quarter 2 2023 net bookings at 1.754 versus 1.85. So lower than expected guidance for the fiscal year 23 as well. So lower guidance for EA, which is making them tank. AMD hasn't dropped anything yet. Airbnb's up. Again, we haven't really gotten any reports on these yet. I can check Airbnb here. Yeah, Airbnb hasn't released yet. Again, so bear with me. There's Airbnb. Nothing out for that yet. It's probably moving up in sympathy with some of these other stuff. Again, Match.com. We can look at that one. Nothing out yet. All right, guys, less than a minute. Less than a minute here before AMD numbers drop. AMD numbers are set to drop in less than a minute. A lot of other stuff is too. We'll cover them as we can, but we're focusing on AMD right now. $20 seconds. All right, AMD moving a little bit ahead of this. Earnings probably dropping pretty soon. Less than 3 seconds. Waiting for the numbers to come out for AMD. Let's see what they show up as. AMD down to 59s here, guys. 59s. Starting to break down for AMD. Waiting for the actual release here for it. Not showing up yet. All right, there's Airbnb. Nothing out for these either. Waiting. No big earnings reactions yet. Airbnb is up. Caesars Entertainment dropped EPS of 24-cent, expected 14-cent, revenue of 2.9 billion, expected 2.8 billion. So Caesars came in better than expected. Nothing yet out for Airbnb yet, though. We're still waiting. Airbnb turning around. They did just drop. Airbnb just dropped. Airbnb tanking down here on this news. Airbnb falling down dramatically here to 105s. All right, so Airbnb just dropped. And they are down big from this news. Looking up Airbnbs now. Still waiting for AMD. Nothing out for AMD yet. All right, so Airbnb's breaking down. Yeah, Airbnb made it weird to look at here. They dropped their results, but they're making you go somewhere else to view it. Airbnb are breaking it down big here. Probably some weakness in the real estate market. EA breaking down big as well. Still waiting for AMD numbers. Airbnb dropped third quarter earnings, EPS of 179 versus 143 expected, revenue of 2.88 billion versus 2.85 billion expected. We're going to post this on our stream. AMD hasn't dropped their numbers yet, but here is the Airbnb numbers. Again, they did a little bit better than expected here. There's the numbers right there for Airbnb. Let me actually label this here so you guys can see it. Airbnb breaking down on this. Maybe it's guidance related. EA dropped EPS of 145 versus 137, revenue of 1.9 billion. So EA came in better than expected. That's weird. It wasn't show. Well, it's not what was showing up on my end, but we'll put this up in chat as well. AMD's not doing anything yet, so AMD's late is what's happening. So AMD hasn't reported yet. They're late. They're supposed to drop pretty soon, but AMD's actually late reporting. AMDs were scheduled for 405. It's now 408. Nothing yet. Put the EA numbers in chat. Put the Airbnb numbers as well. And we're kind of waiting for. Again, Airbnb dropped third quarter EPS of 179. Versus 144 estimates, revenue of 2.88, better than the 2.84. I'm not sure why they're down. I'm going to put those numbers up in chat. Well, that's when the earnings call actually is, Angelica. So the earnings call is then, but the actual earnings are scheduled to come out at 4:05 p.m., right? So this is the way earnings work, right? The earnings come out. Again, let's look at EA. EA, it came out. We got Chegg. Match.com hasn't posted yet. Chegg dropped EPS of 123, revenue of 164.7 million. But yeah, so the actual earnings drop happens at 4 p.m. or 4:05 p.m. So usually the actual earnings report, which is a PDF file, is released sometime after 5 p.m. Following that, the actual earnings call is scheduled generally for like 4:30 to 5 p.m. So AMD's is at 5 p.m. We're going to stream the full thing live as we always do. But yeah, for whatever reason, AMD's late. Their numbers aren't out yet. Again, we're still waiting. AMD's late. McKesson dropped adjusted EPS of 606, worse than the 607 estimates. Revenue of 70.2 billion, on par with the 70.2 billion estimates. But yeah, Airbnb here. Fourth quarter adjusted EBI here. We're going to post a little bit more from this, but all right, so Airbnb guidance was bad. They see revenue as share of GBV to fall in the fourth quarter relative to the third quarter, consistent with historical seasonality. This is what's making Airbnb drop. I'm putting that up in chat so you guys can see why Airbnb dropped as much as it did. They see it. They see everything coming down a little bit. So that's kind of what happened. AMD is still nothing here. You can see AMD chart on the left. Nothing showing up here for this. Still waiting. Still waiting. AMD. Airbnb third quarter revenue at 2.9. We're going to put all this data in the chat for Airbnb. AMD hasn't dropped yet. So AMD is still slow. You can see it on the left here. They're late in reporting for AMD. So put this up on the screen. All right, so we got these numbers up on the screen so you can see AMD is late at reporting their earnings report. All right, so AMD is still late. Airbnb is out. Still waiting on the AMD numbers here. Airbnb testing 100. Hey, thank you, Charlie. I appreciate you, brother. Hey, what's up, Isaac? Hey, we always have, dude. We always have. Yeah, they're a little bit late for today, man. I'm not sure why they're so late, but hey, we're late. I'm still patiently waiting here. We are going to stream the full earnings call live here as well, as we always do. EA came out with 107 EPS versus 135 estimates, 1.9 billion versus 1.78 billion estimates for EA. Or I'm showing different. I'm showing EA came out at first quarter 23 adjusted EPS. Now this must be sales guidance. 145 versus 137, revenue of 1.9. Yeah, so that's EA came in better than expected for sales guidance. So let's see if they should be rebounding a little bit on that. Still waiting for AMD. There's EA at 123s roughly. Again, here's Airbnb affected heavily from everything. Still waiting on the AMD numbers to come out. EA starting to rebound a little bit, man. I'm not sure why AMD is so late. Am I like, when does AMD schedule to report? Like, it says here 405, and my source is usually pretty accurate with this. So 405 is usually pretty accurate, but like for whatever reason. Yeah, we're gonna play AMD as soon as it comes out. We're just waiting on the numbers to drop, team. Also, do me a favor, hit the subscribe button. We're so close to hitting 90K. We got almost 900 people here right now. We need 50 more subscribers to hit 90K, guys. Listen, I'm not gonna pressure you to subscribe, but if you don't subscribe, I'll hate you forever. I truly do appreciate it if you subscribe. Though, help me hit 90K today. On this, if we're on this path to it, we should hit 90,000 subscribers today. So just as a little bit of a prelude to it. Thank you guys so much. I appreciate the love and support. I truly do. It's amazing. We got a free community where we give out free content, and we're about to hit 100K in less than a couple months. Airbnb still waiting, guys. 179 versus 145 estimates. Sales of 2.88, better than the 2.84 billion estimate. So Airbnb did better than expected. Their sales guidance wasn't bad as well. I'm not sure why they're down. AMD still sideways. Nothing. Where is AMD? Market essentially hasn't reacted to it. Yeah, still waiting here for AMD. Time will tell. We're starting to pop back up. Look at AMD at 59.40s. I'm pretty flat in my swing trades. I think the only thing I'm holding is AMC, and I'm holding that from like a long time ago. I'm holding Ford right now, so I am holding Ford, and that's it. So I'm not really I got flat ahead of the Fed rate hike decision because I understand, like, that might influence my trades. Again, last 6 trades I've got into. I'm 5 for 6. I got into Snapchat, Ford, Google, Amazon, and Disney in the last month, right? That's the last 5 green trades. The only one I lost on was Meta, right? So I'm running 80+% accuracy on my swings. I just have it. I'm pretty flat right now. I only swing trade when I see opportunity. Most of the time it's based off of extension. And right now, ahead of the Fed rate hike decision, I'm just not really trying to mess with that. It's just too risky to take any big sizable position ahead of it. We're in backwards land in terms of like this type of stuff right now. So I'm just not really confident in any sizable positions, and I'm just kind of patiently waiting. Once the Fed rate hike decision is announced tomorrow, especially if we drop big, I'll probably start buying stuff up again. AMD just dropped. So AMD numbers just dropped. It's starting to come down some. Here's AMD finally, man. Okay, so AMD just dropped. Diluted earnings per share of 4 cents per share on non-GAAP basis. Gross margin was 50%. Operating income was 1.3. And so again, we're looking at the numbers here. Again, we had revenue of 5.6 billion over expectations of 5.58 billion expectations. So 5.6 billion in revenue for AMD over 5.58 billion expectational numbers. So we did have better than expected revenue. We had a diluted earnings per share of 4 cent profit on a non-GAAP basis, gross margin 40%. And so, yeah, there's AMD's numbers. And AMD is mostly reacted mixed to this. Not really a lot of big numbers. EPS of 67, beating expectations of 65. Revenue of 5.6, beating expectations of 5.5. All right, so 67-cent profit per share, beat expectations of 55 cents. Sales revenue of 5.6 billion, beat the expectations of 5.58 billion estimates. EPS of 67. Again, we'll put these numbers up on chat. All right, again, 5.6 billion. All right, here's the full numbers right here. But yeah, EPS of 67 cents versus 55 cents estimate. There's the numbers right there. I'm showing a lot of different estimates, though. I showed 55. Did they change their EPS? Again, here's a different one I'm showing up on screen. We'll just put this one up because that's the one being reported by TOS. But there's AMD, 67, missed the 74 estimate. Sales of 5.57, missed the 5.82 billion estimate. So I'm showing a bunch of different stuff here, to be honest. But we're going to go with this one. This is the one that's most widely reported. What are you guys showing for expectational numbers here? I think this is why AMD is moving a little bit weird, is because I'm showing 55-cent profit for EPS estimates. They're showing 67%. So it's going to depend a lot on, this looks like the one that most people are using for AMD, but looks like it was better than expected, but I'm showing they missed 67-cent EPS versus 68-cent expectations. 5.2 to 5.8 billion versus 5.85 billion estimate. So guidance numbers came in. They posted a slightly miss on guidance as well. Why is AMD ripping up? Their guidance was a miss. Their EPS missed. Why are they going up right now? Here's their guidance numbers in chat if you guys want to see them. Yeah, here's their guidance. It was worse than expected. And they are flying up. I'm really not sure why. I mean, maybe extension. But yeah, weird. A lot of different sources here I'm seeing. Their fiscal year revenue guidance is a little bit lower than expected. Their fourth quarter revenue guidance is a little bit lower than expected. And they missed on EPS and sales revenue, yet they are flying up at $61 a share. I really don't understand earnings sometimes, but hey, that's kind of what's going on for AMD. Yeah. Yeah, probably priced in, oversold already. That's the only thing that makes sense. All right, guys, we do have the actual earnings call streaming in 40 minutes, guys. Hey, listen, we need 24 subscribers left to break 90,000. 24. Just 24. Airbnb rebounding heavily, too. Yeah, I saw that, Steve. That's basically what I got. I mean, yeah, I'm showing a few different. We got the most legit one on screen, but yeah, I'm going to change this. That's the one I'm showing versus anyway. I'm not sure why this one's showing up. We'll put that one up. I think that's probably the most accurate. I'm showing 5.6 billion estimates here. Weird, man. I'm seeing a lot of different versions of AMD earnings, to be honest, guys. A lot of different versions. I might have to just go check out the report myself with how many fluctuations we're getting in terms of AMD earnings from a lot of different sources here. Weird. Like, everybody struggles to interpret them really quick, but just strange. Adjusted EPS was 67 cents, estimates of 65 cents. Here, this is probably the most accurate one I can see here. And so we'll put that one up on screen. That's probably the most accurate one. We'll leave that one up on screen. AMD fly it up. Airbnb move it up with it as well. Yeah, I don't know why we have so many numbers here. AMD, they were late with reporting, and then the numbers are just off. It's just a weird release, to be honest. Stick around, though, guys. We are going to stream the full earnings call. We'll be able to hear from the horse's mouth exactly what happens here. So stick around, guys. We will be covering the full earnings call live at 5 p.m. So y'all be ready. We will be covering the full earnings report live at 5 p.m. We do have some fun data that we're going to be reporting in chat right now. AMD, rip it up. I know, AMD earnings are out. I'm having a hard time figuring out what's the right. All right, here. It looks like we sent in a corrected version for AMD. This looks like the most accurate. This looks like the most accurate one. So we're going to put this one up on screen. Yeah. Yeah, I mean, again, this is not me. This has nothing to do with me. I mean, if you guys watch the earnings report, I'm telling you guys, I'm getting 4 or 5 different numbers being read for AMD. The whole thing's a cluster, mess, man. It's just ridiculous. Again, we're gonna stream the 4 earnings calls to see what they're gonna show, but I'm showing multiple different numbers. It's fine for expectational numbers because expectational numbers are different. They vary depending on who the analyst was, right? But for the actual EPS to vary so much, it's a little off. Yeah, Citigroup expects higher quarter 4 22 and quarter 1 23 oil prices than they did 4 to 6 weeks ago. All right, here is the corrected version, and it is the one we have on screen. We have a corrected version here. It is, again, EPS of 67 cents, missed the 68 cent estimate. Sales of 5.57 billion, missed the 5.62 billion estimate. So here's the result. Here's the actual results, the corrected version. Like I said, what a mess, man. I've had multiple different versions pop up, same sources too. It's just a mess. Yeah, I mean, they're not good. They missed on EPS, they missed on sales revenue, they missed on guidance. So I'm not sure why they're moving up like this, but they missed on everything. It's kind of strange, but hey, it is what it is. Again, guys, in about 30 minutes, we have the actual earnings report coming out. So y'all stick around. Also, guys, again, we've been doing pretty well. If you want to trade some of these big economic releases here, like here's Airbnb. There's the SPY, and if you look at the E-mini, you'll notice something, which is that they look pretty similar, right? They look pretty similar. Big move up, slight pullback, big move up, slight pullback. And so you can trade these. You can trade this right side here with no PDT rule in the futures market. It's the easiest way to get around it. And Top Step funds traders in futures. So they give you a demo. If you can hit their target on the demo while following all their rules, conditions, and phases, then they fund you between 50 up to 150,000 with a 90% split. Top Step is regulated in the U.S. They pay out millions, fund thousands of traders a year. We're working our way on getting funded, and this is the most legitimate kind of prop firm funded account program in the world. You can see in 2021, they paid out $3.3 million to their funded traders in withdrawals. So, like, they give you a demo. If you can hit their target once you're funded, if you can hit their target while following their rules and conditions and pass both phases, then they fund you the same amount, right? 50K up to 150K. Last year, traders withdrew in withdrawals from them, not in funding, but in actual withdrawals over 3 million and 8,400 accounts funded. 97% of traders said it helped them get better in 143 countries. If you want to check them out, they are a sponsor of my video. Check the link. Here's the link. Great way to help support your boy here. Just check it out, Top Step. You can also find the link in the description. The market's turning here. AMD is starting to pull back a little bit after the corrected earnings report here. So AMD flew up on those earnings initially, and it's starting to pull back some on these numbers. Again, AMD starting to dip down a little bit. It's at 59.60s. We got the E-mini. Can y'all hear the call from dad thing? But yeah, guys, hey, E-mini pulling back a little bit. Here's Airbnb. Airbnb started to go the right way. We're at 105, so it tested that previous closing price. AMD's pretty break even here. And so it's not enough for me to want to buy this dip quite yet. Yeah, that's probably what happened, Angela. Yeah, AMD coming back down after it's corrected. Yeah, for sure. Yeah, who's going to be the last 10 subs here, guys? We need 10 subs. I would never pressure you to subscribe, but if you don't subscribe, I'll hate you forever. Do it now. Hold on one second, guys. My dad's calling me. I'm going to make sure everything's okay. Let me turn my Bluetooth off. There we go. All right, yeah, everything's fine. He was checking to see how my heart results came out. But yeah. Yeah, they came out. These numbers, I cover all the major economic earnings releases, guys. Every major economic earnings release we cover. Very strange for there to be such a big discrepancy in all these different aspects. There's so many different discrepancies for AMD. You know, we had multiple different numbers show up. Multiple different numbers come out. And again, we're going to put this up. The earnings call will be streamed live. At 5 p.m. So the earnings call will be streamed live at 5 p.m. here, guys. So be ready. Yeah, I mean, if you've ever tried to read an earnings report, like what happens, the reason this type of stuff happens, team, the reason some of this stuff happens is because the earnings report, if you read them, like what happens when these companies drop earnings reports, right? Is the companies put out these earnings reports and they always try to say the best things at first, right? So they never just say, hey, here was our EPS, here's our sales revenue, boom, that's it. You're welcome. Right, here's our growth in these different sectors. They never just say that, right? It's always like a big pump fest, right? When these companies drop earnings reports. So they're like, yeah, we did a record quarter. Like they might be down 100 million, but they're going to say, oh, we did a record quarter in some obscure metric. You know, they're certainly trying to twist it. And so what happens is like, it makes it really difficult to get the real numbers sometimes. And what happens is like they drop these reports and then the algorithms start trying to read them and interpret them, right? So most of this is not even human error. Most of this is algorithmic errors, right? So the algorithms immediately start interpreting these earnings reports, which are just filled with a bunch of fluff. Is the best way to put it. Just a bunch of nonsense, you know? And so these algorithms start trying to read it and they say, okay, well, this is the number, right? That's how you get stuff like today, is that the algorithms are just they're trying to read it fast and they just dropped the wrong number. But yeah, third quarter EPS 67-cent profit, missed the 68 estimate. Sales of 5.57 billion, missed the 5.62 billion estimates. Is essentially what happened here. So again, we missed on both metrics for AMD. We're still green, which is surprising here. We're still green for AMD, which is interesting. Yeah, it's essentially fluff. I mean, it's not illegal because it's their own report. Like, it's their report. All companies do it. It's not just one company. It's every company. Every company does the same thing, which is you read their earnings report. We are the greatest company ever. We're breaking records, you know. All right, guys. Sorry. Yeah, 2 p.m. is the craziest thing, man. No, we don't really alert options, Rakesh. We're not really like what we do here at Beginner Trading is we just kind of give everything away for free. And so we put out all the major economic news, all the big earnings reports we cover. We cover all the major economic releases like Fed rate hike decisions, CPI, both European CPI, American CPI, Canadian CPI. We'll cover jobless claims report every Thursday. We cover just every major economic release you can think of. Today we had the JOLTS the JOLTS job openings. We had PMI, so manufacturing expansion or contraction readings. You know, we cover all the major stuff that influences markets. And so if you want to, and it's completely free. We don't have any paywalls behind anything here. So if you appreciate it, hit the sub button, hit the notification bell. We appreciate it. AMD testing that $60 whole dollar level here. So again, we'll see if we can break that. We got about 30 minutes. The actual earnings call set to start in 30 minutes. Again, we need like 10 subscribers left to break 90,000, man. That's crazy that we're going to break 90K today. That's absolutely insane, man. I appreciate the love and support. Thank you guys so much. Again, we truly do, appreciate everything here, guys. Couldn't have it without you. We got a really good group of traders here. And we live stream every day. We live stream every weekday morning right here on YouTube. We don't sell a course or a service ourselves. We just kind of stream everything. I trade a 30,000, 120K buying power account on Thinkorswim. We also trade the Top Step Challenge live at the open every day. And we've been doing pretty well with that too. We trade a lot of these big Echo releases as well. Again, here's today. We made about 400. If you look at last month, which is October, really, let's look at everything. So we'll look at since this started. This is our graph pulled directly from the platform, so it's not really fakeable, you know. So here's our full graph pulled directly from the platform. You know, that's our full graph. So since we started this, we're up 94. Oh wait, this is wrong. I'm sorry. We actually are up far more than that now. This is the first. This is our actual graph here. So we are up about 3,700 since we started this. So not doing bad. And again, I'm not claiming to be an expert or anything like that, but that's pulled directly from my platform. Like that profit graph is pulled directly from it. And so I can't fake it. So I think I'm a good trader, but of course, who knows? All right, guys, AMD at 60.5s. Again, Airbnb still testing that 106 level. AMD earnings release was weird. We had a bunch of mixed results, a bunch of different numbers. Yeah, tomorrow is going to be crazy chaos, Michael. 100%, dude. Tomorrow is going to be super interesting. AMD guidance. They expect non-GAAP gross margin to be approximately 52% for 2022. Full year fiscal year 22, they expect revenue to be approximately 23.5 plus or minus 300 million. an increase of approximately 43% over 2021, led by growth in the embedded and data center segments for AMD. Non-GAAP gross margin is expected to come in at 51% in the fourth quarter of 22. Year over year and sequentially, the embedded data center segments are expected to grow. That's kind of what's helping AMD the most, is the embedded and data center segments. They expect fourth quarter of 2022 revenue guidance to be approximately 5.5 billion plus or minus 300 million, an increase of approximately 14% year over year and flat sequentially. They think the third quarter came in below our expectations due to the softening PC market and substantial inventory reduction across the country from PC supply stuff. And again, this is probably why AMD is reacting positively to this, is because while they said that the third quarter came in below expectations due to softening PC markets and substantial inventory reduction, they did say that they do expect the fourth quarter, so future guidance, to be roughly 5.5 billion plus or minus 300 million, which is up 14% year over year. And so that's probably why they're up for AMD. It's like 60.7 right now, 60.8. And so again, we'll see what we get. The earnings call will state a little bit more. No, I didn't buy any dips ahead of this one, man. We got the Fed rate hike decision tomorrow, so I'm not really trying to buy dips into this. It's too much risk there, man. What is the average hold time of your trades? I would say 30 seconds to 2 minutes. Very quick, short term. Those are my day trades, though. My swing trades, like I said, my swing trades I can list here. And we announced every one of these when we got in. Right? Disney, we bought it at 91.60. We sold it at about 102 over the last month and a half for Disney. Snapchat, after their big earnings drop, we bought it at like high 7s, low 8s. Sold it at just under $10. Our last exit was just under 10. Really nice gains on that one. We bought Amazon after earnings. I thought Amazon was a huge overreaction. You know, Amazon had mixed EPS and sales results. They had worse EPS, better than expected sales revenue, and a slight miss on guidance, and they dropped like 20+%. Just ridiculous. And then so I ended up just buying that dip on Amazon and riding it back from like 91 or 92s up to like wherever it ended up, like 100 or whatever it is. Had a lot of people get weird when I bought that dip, but I made a bunch very quickly on that swing trade. Held for just a couple days, exited within 3 or 4 days, making good percentages. Same thing I did with Google. Google, same thing. Big overreaction to earnings. We bought the dip at 91s or 92s and sold at like 96 or 97. And then we're also currently in Ford. Our current Ford entry right now for our swing trade in Ford is 1250s. We're at 1340s right now. So we're doing pretty well. We have already taken a little bit of profit in Ford, and I think we're just going to sit on that. So the only one that we lost on over the last month, the only swing trade that I can remember that we lost on, I have to check my actual trade history. But the only one that I can remember me losing on is Meta. You know, we bought Meta after the dip, hoping we'd bounce back, but we ended up cutting the very next morning. You know, we only lost like $100 or something small like that, and so we got out very quickly with Meta. We recognized again, Meta is not the same as Google and Amazon and all that stuff. The reason it's not the same is because I believe in Amazon and Google and, you know, all that's long-term future, Disney's long-term future. I can hold that for years if I need to and feel comfortable and not lose any sleep at night holding those for years, and I'll probably make a ton of money doing so. Meta is a different story. Meta, it's not guaranteed, you know, to be healthy long-term. AMD testing the highs at 6150s, guys. Ramp it up. Again, the earnings call starts in about 20 minutes. 20 minutes for the earnings call. Hey, guys, we just broke 90,000 subscribers. Thank you guys so much, man. Thank you guys so much. That's amazing. Almost up to 100. Almost there. Another milestone hit. 90,000 subscribers, guys. Hey, cheers to you. We appreciate the love, guys, so much. Thank you. Somebody said this was beer the other day. This is stevia cola, okay? This is healthy cola. Kind of healthy. Stevia, I don't know how good stevia is for you, but it's sugar-free cola. But yeah, hey, we broke 90,000. Thank you guys so much for everybody. Pawn, my guy, thank you, brother. DS, Spec, Daniel, you know, Fishin, everybody that helped us grow, man, we appreciate you guys. DS, Spec, everybody, Angel, all the people that helped us grow, man, we appreciate you all. Thank you guys so much. Douglas, for sure. Douglas, my guy. Ali B, if he's there. Daniel. Appreciate the love, guys. Chris, Tiny. Appreciate the support, guys, for sure. Crazy that we hit 90K, man. We'll try to break 100 before the end of the year. We're kind of getting close to it. We'll get close. We'll break it in January, no matter what. But yeah, thank you guys so much, man. That's great. Hey, thank you, team. Yeah, Brant. Hey, not me. I'm okay with it. All right, Abnb pulling back to 61s here. But yeah, thank you guys so much for the 90K subscribers. Hey, we appreciate it. That's great. What do you think is going to happen tomorrow? I really have no idea. I think we'll probably drop 75 basis points, and then I'm not sure what kind of reaction we're going to get from 75 basis points. I don't think we're going to go under that. I hope we do, though. I hope I'm wrong about this one. I think we'll probably do 75. I think probabilities are pretty high at 75. I think there might be a chance we do 50. There might be a chance that we do 100. But I think it's almost, it's pretty likely 75 basis points. The real question is, how does the market respond to that? How does the market respond to a 75 basis point, like on par neutral rate hike in terms of like expectations? How does the market respond? Is the market already baked in? We are up a solid amount over the past like week or two here. So the real question is, are we extended in one direction heading into that? And if we are neutral in terms of expectational numbers for our rate hike, which way does the market respond? Let me know what you guys think. Yeah, I mean, and the bulls would be right. I mean, AMD responded positively to this. They went up from this so far, at least. And again, in the end, bears. Again, the Snapchat trade changed my perspective of bears. Right? Like I bought Snapchat after that big drop from earnings, and I just got so much hate from buying Snapchat. There's so many weird people, bro. It's like, dude, you can get like, there's no reason to get mad at somebody for buying a dip, So we bought Snapchat after the dip, and just got so many weird people. It was weird. I had people messaging me, calling me names, like all this dumb stuff, man. And then sure enough, Snapchat goes up like 20+% in 3 days after that, and then just crickets, And it's just like, in the end, you got to go your own way, man. People are mad I'm still talking about it. I'm gonna keep talking about it too, Bro, one of the Migos rappers got shot in Houston, man. That's crazy. Rest in peace. AMD tomorrow? I'm not sure. Good luck, guys. Yeah, rest in peace, man. It's sad. All right, guys, we got 18 minutes. 18 minutes before the actual earnings call starts. Y'all be ready. Remember, on Twitter, guys, we might have a giveaway going on right now. So again, in November, we're giving away a PS5 or Xbox Series X to one person who follows, retweets, and then replies with their favorite stock market meme on Twitter. And so, hey, haven't followed me on Twitter yet? Here's the link. Do it now. So the earnings call. Why would anyone get attached to a share of a company? I'm not attached to anything. Like, I'm not attached to any stock whatsoever. I don't care enough about any stock. The only people that are really attached to shares of companies are people that are stuck big time in them, right? Because when you're losing really, really big in a company, what do? Right? You start to become a fanboy of that company because you're so desperate for it to rebound with confirmation bias is all it really is. That's why, like, some of the biggest communities in stocks are stocks that have just tanked down huge percentages over the last year or so. And now they've got these huge followings of traders that are, patting each other on the back. Most of the time they lose. I'm from Louisiana, Brent, but I live in Houston, Yeah. But yeah, Houston's fun, man. Astros about to win tonight, though. That's all I'm saying. Fed, okay, so at 2 p.m., the Fed does their rate hike decision. At 2 p.m., they drop their actual decision for their rate hike. And then at 2:30, they do the press conference. We will be streaming their press conference as well. Citigroup expects higher quarter 4 22 and quarter 1 oil prices than they did 4 to 6 weeks ago. Expects Brent crude to be averaging at 97 BBL in the fourth quarter, 22, and USD 88 BBL at 23. This is where you're wrong, bro? I don't think so, Peter. Yeah, I don't think we're going to do 50. I think 75 is pretty set in stone, in my opinion. But who knows, man? Eastern Standard Time. So anytime I say a time, it's always market time. So Eastern Standard Time. Airbnb, break it down. AMD tried to move up. AMD is actually kind of green from this earnings report, surprisingly enough. Hey, thank you, Kevin. I appreciate you, man. All right, guys. Airbnb, AMD at 61s here, team. 61s. Again, vote on the poll. Whew, I got to get ready for the World Series tonight, man. All right, we're at 104s. AMD at 60.9s. But yeah, thank you guys so much, man. It looks good, bro. It looks good next to my name. That's all I'm saying. Look, it looks good here. 90K. 90K subscribers looks good here. Airbnb, break it down here, guys. So look at Airbnb. Again, this previous closing price, messed up my drawing. Here, this previous closing price right here, this light blue line right here, is the level at which it goes from red to green, green to red on the day. You can also see it with AMD right here. So here it is with AMD. It's right around $80 or $60 essentially for AMD, right at 60 bucks. So again, this is going to be a highly influential level for Airbnb. It's right around 107. So you can see this level right here. It's right around 106.90s. Highly influential level. Now, again, this is going to be big support or resistance level that a lot of people are paying attention to. So a lot of people are watching this level. A lot of people are paying attention to it. And with that, they're going to be basing trades around it. So it's relevant. It'll hold as support or resistance, And so because of that, we're watching it. And again, we'll see if we get anything reasonable coming through here for AMD. In terms of holding, AMD actually had misses on most metrics for earnings. So they missed on EPS. They missed on sales revenue. They beat on some guidance metrics. They did beat on some guidance metrics, which I'm speculating to be why they are slightly green still, but they are starting to consolidate just over the previous closing price. And so it is possible that we just kind of plummet back down. There are bag holders in Dogecoin, AMC, GameStop. Yep. The first three of those are my prime example, Peter. Again, those first three, some might even consider Bitcoin in there. It'd be that first 4 or 5 to be a prime example. Again, Dogecoin, not the best argument. AMC, not the best argument. GameStop, not the best argument. Yeah, there might be bag holders in Amazon and Apple, but the difference here is that the bag holders on Amazon or Apple are probably right. Amazon and Apple will probably eventually break whatever level they purchased it at, and it'll be a profitable trade. Why? Because those are actually wildly successful behemoth companies where you can hold long enough and in green in those trades. That's why there's a huge edge to trading large caps and investing in large cap companies, is because regardless of how right or wrong you are about any short-term trade, you can usually hold it long-term and be fine bag holding those stocks. I'm not telling you should, but I'll hold Disney for a year and it'll probably be higher than where I bought it. The first 3 in that list, Peter, are not like that at all. The first 3 are my exact examples. Those prove my argument specifically, is that the reason they're big is because people are down so much in it. AMC was at 60s. GameStop was at 500 plus before the split. Dogecoin is at 8 cents now? My mom asked me if she should buy Dogecoin back when Dogecoin was ripping up. It was at 65 cents. I told her absolutely not. I told her if she's hearing about it outside of the stock market, it's too late. And sure enough, Dogecoin is down, whatever that is, 80-something% or whatever that is. And so just in the end, that kind of proves my point there. Yeah, that could have been a Tarn. Maybe missing was baked in already. I mean, I think AMD's had a tough road the last couple months, if not the last year. If you look at AMD's long-term chart, it's been a struggle for the last year here. It's down to 59.60s here, so it's been struggling. Not saying it's done, but and yeah, thank you guys so much for the subs here, man. We're at 90 plus subscribers, 90 plus thousand. That's crazy. There's a community for almost all the stocks in crypto. 100% there's communities, 100%, right? But the biggest communities that I've seen in penny stocks are penny stocks that have just gotten absolutely destroyed. Same thing with crypto. There's communities in all of them. But a lot of the big communities that you see in stocks are from stocks that have absolutely tanked. It's just the truth, man. Like if you look at it, listen, I trade every day and I've traded every day for 5 years plus. All right, I've traded crypto, I've traded stocks. If you look at some of these communities that sprout up, a lot of them are from stocks that the people are just wildly stuck in. Here's some examples. You want some examples? CEI, SOS. You got Dogecoin. You got AMC. You got GameStop. You got Peloton. You got. I could go on and on about these stocks. Apple and Amazon and all that stuff. Sure, they have communities, but the ones that are the biggest are usually ones that are people are just down big in, unfortunately. Why do you think Elon likes Dogecoin so much? I'm not hating on Dogecoin, man. Good for it. I just don't think Dogecoin really does anything. And I don't think Elon has really said much about Doge in the last year. And so I'm not knocking Dogecoin. I'm really not. I just don't think it does anything. I don't think there's a use for it. I think it's a popularity contest. And while Doge might be popular, the cryptocurrencies that last the longest are cryptocurrencies that have actual utility. And I just don't know if that's Dogecoin right now. I think... yeah, that's probably what you're talking about, Brainy. Maybe that's a better way to explain it. Not necessarily, Peter, man. Listen, this is what happens for new traders. And it's a good conversation to have. Don't think I'm arguing with you. I'm really not trying to argue with you. I think this is a great conversation. And I might be, maybe you're right. I might be wrong. Maybe you're right, bro. So I'm not coming at it from like a bad perspective here, okay? But what I've seen a lot in my 5+ years of trading the market every day is I've seen a lot of really predatory penny stocks and AMC and GameStop to a certain extent have online influencers tell people that they're going to 1000x. They tell people that they're going to go up 1000%. And so you get a lot of new rookie retail naive investors that spend their life savings on those stocks, put their life savings into those stocks, right? And then said stock just loses 70+% of its value. And these big communities sprout up around it, where these influencers are telling people, a lot of the time they'll scream manipulation when it's not that. These are just terrible companies that are struggling. And then instead of being like, yo, I was wrong, those communities end up just changing anything. With the penny stocks, a lot of the time what happens is like you just never hear about them again. CEI, prime example. You'll just watch the stock go from $5 a share to 3 cents a share, and then eventually get delisted to the pink sheets and go to zero. I see it happen all the time, and everybody that invested in that lose thousands and thousands, if not millions of dollars. It's incredibly predatory, and it's something that a lot of new traders specifically get wrapped up in. Happens so much. All right, guys. AMD, the only justifiable reason I think AMD is up is because their guidance numbers weren't terrible. Again, we read these numbers earlier. The earnings call starts in about 6 minutes, guys, so we're going to be covering it. Again, AMD expects revenue in 24th quarter to be approximately $5.5 billion plus or minus $300 million, which is an increase of roughly 14% year over year and flat sequentially. This is probably one of the reasons it's up. Again, we're going to put these numbers in chat so you guys can see it. Real move coming from earnings release call. This is a fake pump. No, that's very rarely what happens. Again, the only justifiable reason I think AMD is up is because their guidance numbers weren't bad. It says that their embedded and data center segments are expected to grow They did try to justify the losing. They said that the third quarter came in below our expectations due to softening PC market and substantial inventory reduction actions across the PC supply chain. And again, I'm not saying I agree with the price reaction, but I think if you're trying to argue why it went up, that might be why. I'm not sure. Carol's going to call me and see if I want to get food. Watch. Hello?
Hi.
Hey, you're on stream right now. So don't curse or say anything inappropriate.
Okay. Well, I'm at Chick-fil-A.
Oh, okay. Well, give me told you guys. I know Carol really well. I told him you were calling to ask me if I wanted food. Give me a macaroni and cheese, and then give me the
you
deluxe.
Just text me everything you want.
Yeah, I'll text you.
Her because she's not gonna remember. All right.
All right. I love you.
All right. Love you.
Bye. I'm a mind reader over here, bro. I got the predictive brain of of Elon Musk over here. I got the predictive brain of Bill Gates. Top 3 most better predictors in the world right now. Most better. All right, guys. Again, earnings numbers come out in about 4 minutes. What is the Chick-fil-A chicken sandwich that actually has cheese on it? I think it's called the Chick-fil-A the fried chicken deluxe sandwich. In parentheses, the one with cheese. With no pickles. And don't order it with pickles and then pick it off. Because then my sandwich tastes like pickles. There you go. Large fry. Actually, I'll take 2 of those. All right, there we go. All right, guys. 3 minutes, guys. 3 minutes. Yeah, hey, and some mac and cheese. No pickles, bro. No pickles. All right, guys. Earnings call starts in about 3 minutes. All right, we're ready. You guys ready? What do you guys think? Good or bad? Earnings call. I mean, again, we're kind of green, but I can't say I agreed with it, but we're kind of green. All right, guys, less than 2 minutes. All right, guys, we got the earnings call. Can y'all hear the music? Make sure y'all can hear the music. No, I don't like the pickles.
Hello.
All right, guys, less than about exactly a minute right now, guys. Exactly a minute. Again, good or bad? What do you think the market is going to do? Waiting on the actual earnings call right now. Well, I got 2 different screens up here. Weird. All right. And again, y'all could hear the music when it was playing. Not anymore, but when it was playing, right? I'm just trying to do a sound check before the actual earnings call. Yeah, thank you guys so much for helping me hit 90,000. All right, guys, let's do this. Waiting patiently for the numbers to come out. Still pretty quiet here, playing cheesy hold music. Um, Airbnb dumping. Yeah, Airbnb pulling back. AMD over 61s now. Yeah, that's kind of what it is. That's exactly what it is. Earnings sound bad. Guidance sounds good. That's basically what it is. Good guidance, bad earnings. So they did bad this last quarter, but they think they might do good the next quarter is essentially what they're saying. There's not another earnings. There's an earnings call. So after 4 p.m. is when the earnings call is when the earnings report is dropped. And again, earnings reports are basically interpreted by algorithms as soon as the 4 p.m. dot hits. Again, we're waiting here. Once the actual earnings report comes out, and that tells you EPS and sales revenue and all that stuff, sometime after that, the actual earnings call, where sometimes the CEO will speak, executive speaks, they'll do a Q&A session, all that stuff. That's kind of what happens. And so that's what we're essentially waiting on the earnings call to start now. And again, we'll stream it live here. AMD at 6120s here, 6120s.
Call.
Sound check.
At this time, all participants are in listen-only mode. If anyone should require operator assistance, please press *0 on your telephone keypad. A question-and-answer session will follow the formal presentation. As a reminder, this conference is being recorded. It's now my pleasure to turn the call over to Ruth Cotter. Please go ahead, Ruth.
Thank you and welcome to AMD's third quarter 2022 financial results conference call. By now, you should have had the opportunity to review a copy of our earnings press release and accompanying slideware. If you do not receive these documents, they can be found on the Investor Relations page of amd.com. We will refer primarily to non-GAAP financial measures during this call. The full non-GAAP to GAAP reconciliations are available in today's press release and slides, which are posted on amd.com as mentioned. Participants on today's conference call are Dr. Lisa Su, our Chair and Chief Executive Officer, and Devinder Kumar, our Executive Vice President and Chief Financial Officer and Treasurer. This is a live call and will be replayed via webcast on our website. Before we begin today, I would like to note that Mark Papermaster, Chief Technology Officer and Executive Vice President, Technology and Engineering, will attend the Wells Fargo Technology, Media and Telecommunications Summit on Wednesday, November 30th. And our fourth quarter quiet time is expected to begin at the close of business on Friday, December 16th. Today's discussion contains forward-looking statements based on current beliefs, assumptions, and expectations, speak only as of today, and as such involve risks and uncertainties that could cause actual results to differ materially from our current expectations. Please refer to the cautionary statement in our press release for more information on the factors that could cause actual results to differ materially. Now with that, I'd like to hand the call over to Lisa. Lisa?
Thank you, Ruth, and good afternoon to all those listening in today. Our third quarter revenue and gross margin came in below our expectations due to softening PC demand and substantial inventory reduction actions across the PC supply chain. Despite the macro backdrop, overall revenue grew 29% year over year to $5.6 billion, as our data center, gaming, and embedded segments each delivered significant year-over-year growth and performed in line with our expectations. We also expanded gross margin and grew net income year over year, highlighting the strength of our business. Turning to the business results, starting with our data center segment, revenue increased 45% year over year and 8% sequentially to $1.6 billion. We delivered our 10th straight quarter of record server processor sales, driven by strong demand for third-gen EPYC processors and initial shipments of our next-generation Genoa CPU to select customers. Cloud revenue more than doubled year over year and increased sequentially as multiple hyperscalers expanded deployments of EPYC processors to power their internal properties, and more than 70 new AMD instances were launched by Microsoft Azure, Amazon, Tencent, Baidu, and others in the quarter. In enterprise, OEM revenue was down sequentially as server OEMs continued working through match set issues, and some businesses slowed the pace or scale of their purchases based on the macro uncertainties. Looking at the broader competitive landscape, our third-gen EPYC CPUs in market today are the highest performant and most energy-efficient x86 server CPUs available, and we expect to further extend that lead with our next generation 5-nanometer Genoa processors, which deliver significant performance, energy efficiency, and TCO advantages for both hyperscale and enterprise workloads. We will publicly launch Genoa next week and are ramping production to support initial cloud deployments and the introduction of 4th-gen EPYC processor platforms by HP Enterprise, Dell, Lenovo, Supermicro, and others. Looking at our broader data center portfolio, as expected, data center GPU sales were down significantly from a year ago when we had substantial shipments supporting the build-out of the Frontier exascale supercomputer. We made good progress with our data center GPU software enablement work in the quarter, including announcing our role as a founding member of the PyTorch Foundation. We look forward to working closely with the largest cloud providers as we drive a standards-based approach to the development of popular PyTorch deep learning software framework. Demand from data center customers for our adaptive, SmartNIC, and DPU products was strong during the quarter. We had record sales of our Xilinx FPGA and networking data center products led by demand from cloud and financial customers. Sales of our Pensando DPUs also ramped significantly from the prior quarter, driven by cloud adoption. The addition of Pensando DPUs to our product portfolio has been very well received by customers, highlighted by our enterprise customer pipeline doubling in the few months since the acquisition closed. We were excited to support VMware's launch of its next-generation cloud virtualization platform in the quarter. Our Pensando DPUs will be included in the first validated server and HCI solutions, supporting the new VMware virtualization offerings from Dell, HPE, and others that will make it much easier for enterprise customers to build more performant and secure data centers powered by our industry-leading DPUs. Taking a step back, we have built significant momentum in our data center business as we have consistently executed our server CPU roadmap and expanded our solutions capabilities with the addition of the Xilinx and Pensando products to our portfolio. We remain on track to further expand our product portfolio in 2023 with the launches of our Edge and Telco-optimized Siena and Cloud-optimized Bergamo processors. With 128 cores and 256 threads per socket, we expect Bergamo will further extend our performance and energy efficiency leadership in cloud workloads. Customer response has been very strong based on the performance, features, and software compatibility Bergamo delivers. We believe our broad family of leadership CPUs, GPUs, FPGAs, adaptive SoCs, and DPUs position us well for long-term growth and share gains in the data center. Now turning to our client segment, revenue declined 40% year over year to $1 billion. Our client processor shipments were below PC consumption in the third quarter as we worked closely with our customers to reduce downstream inventory. Desktop channel sell-through increased from the prior quarter, driven by increased demand for our Ryzen 5000 series CPUs and the launch of our Ryzen 7000 series processors and AM5 platform in September. We launched our 5-nanometer Ryzen 7000 series processors to strong reviews based on delivering leadership performance in gaming, productivity, and content creation applications. We expect Ryzen 7000 CPU sales to ramp this quarter, aligned with the launches of a broader range of mainstream and enthusiast AM5 motherboards. Now turning to our gaming segment. Revenue increased 14% year over year to $1.6 billion as strong semi-custom sales offset a decline in gaming graphics. We delivered our sixth straight quarter of record semi-custom SoC sales as demand for the latest game consoles remained strong and Sony and Microsoft prepare for the holiday season. Gaming graphics revenue declined in the quarter based on soft consumer demand and our focus on reducing downstream GPU inventory. We will launch our next generation RDNA 3 GPUs later this week that combine our most advanced gaming graphics architecture with 5-nanometer chiplet design. Our high-end RDNA 3 GPUs will deliver strong increases in performance and performance per watt compared to our current products and include new features supporting high-resolution, high-frame-rate gaming. We look forward to sharing more details later this week. Looking at our embedded segment, revenue increased significantly year over year to a record $1.3 billion, driven by growth from aerospace and defense, industrial, and communications customers. Demand across our core markets remained very strong. We had record sales to aerospace and defense and automotive customers who are increasingly using our FPGA and adaptive SoC products to enable differentiated capabilities and features in their products. Record communications market revenue was driven by growth from both wired and wireless customers. We saw particular strength in North America, led by new 5G wireless installations and expanded wired infrastructure deployments. Overall demand for our Xilinx products remained strong as we continued to leverage AMD's scale to secure additional supply to address this demand. Longer term, we're very excited about the growth opportunities in our embedded business. We closed multiple high-revenue design wins in the quarter with automotive, networking, emulation and prototyping, communications, and aerospace and defense customers. We're also seeing new design win opportunities and deeper engagements with many of our embedded customers based on the expanded breadth of our adaptive SoC, FPGA, CPU, GPU, and DPU product portfolio. In summary, we're well positioned to navigate the current market dynamics based on our leadership product portfolio, strong balance sheet, and growth in our data center and embedded segments. We have three clear priorities guiding us. First and foremost, we're focused on executing our roadmaps and delivering our next generation of leadership products. Second, we're building even deeper relationships with our customers as we make AMD a fundamental enabler of their success. And lastly, we remain very disciplined in how we manage the business. We will continue to invest in our strategic priorities around the data center, embedded, and commercial markets, while tightening expenses across the rest of the business and aligning our supply chain with the current demand outlook. The secular trends driving increased demand for high performance and adaptive computing in the cloud, at the edge, and across intelligent end devices remain unchanged and provide a strong backdrop for long-term growth. Now I'd like to turn the call over to Devinder to provide some additional color on our third quarter financial performance. Devinder?
Thank you, Lisa, and good afternoon, everyone. AMD reported third quarter results in line with the preliminary results we announced last month. While we are pleased with the performance of our data center, gaming, and embedded segments, each of which grew significantly year over year, our third quarter results also reflect lower than expected client segment revenue. Third quarter revenue was $5.6 billion, up 29% from a year ago. Gross margin was 50%, up 150 basis points from a year ago, primarily driven by higher revenue in the embedded and data center segments, partially offset by lower client revenue and $160 million of inventory pricing and related charges in the graphics and client businesses. Operating expenses were $1.5 billion compared to $1 billion a year ago as we continue to scale the company. Operating income was up 20% from a year ago to $1.3 billion, driven by revenue growth and higher gross margin. Operating margin was 23% compared to 24% a year ago due to higher operating expenses. Net income was $1.1 billion, up $202 million from a year ago. Earnings per share was 67 cents per share compared to 73 cents per share a year ago, primarily due to lower client segment revenue. Now turning to our reportable segments. Starting with the data center segment, revenue was $1.6 billion, up 45% year over year, driven by strong growth in third-generation EPYC server processor revenue. Data center operating income was $505 million, or 31% of revenue, compared to $308 million, or 28% a year ago. Higher operating income was driven primarily by stronger revenue, partially offset by higher operating expenses. Client segment revenue was $1 billion, down 40% year over year due to reduced processor shipments resulting from a weak PC market and a significant inventory correction across the PC supply chain. Client operating loss was $26 million compared to operating income of $490 million, or 29% of revenue a year ago, primarily due to lower revenue. Gaming segment revenue was $1.6 billion, up 14% year over year, driven by higher semi-custom product sales, partially offset by lower gaming graphics revenue. Gaming operating income was $142 million, or 9% of revenue, compared to $231 million, or 16% a year ago. The decrease was primarily due to lower graphics revenue and inventory pricing and related charges. Embedded segment revenue was $1.3 billion, up $1.2 billion from a year ago, primarily due to the inclusion of Xilinx embedded product revenue. Embedded operating income was $635 million, or 49% of revenue, compared to $23 million, or 30% a year ago, driven primarily by higher revenue. Turning to the balance sheet, cash equivalents, and short-term investments were $5.6 billion at the end of the third quarter. During the quarter, we repaid the 7.5% senior notes totaling $312 million that matured in August and deployed $617 million to repurchase common stock. We have $6.8 billion in remaining authorization for stock repurchases. Cash from operations was $965 million, and free cash flow was $842 million, compared to $764 million in the same quarter last year. Inventory was $3.4 billion, up approximately $721 million from the prior quarter, driven primarily by client products and new products ramping in the second half of the year. Now turning to our financial outlook. Today's outlook is based on current expectations and contemplates the near-term macroeconomic environment. For the fourth quarter of 2022, we expect revenue to be approximately $5.5 billion, plus or minus $300 million, an increase of approximately 14% year-over-year and flat sequentially. The year-over-year growth is driven by embedded and data center segments, partially offset by a decline in the client and gaming segments. On a sequential basis, embedded and data center segments are expected to grow, offset by declines in the client and gaming segments. In addition, for Q4 2022, we expect non-GAAP gross margin to be approximately 51%, non-GAAP operating expenses to be approximately $1.55 billion, or 28% of revenue, non-GAAP interest expense, taxes, and other to be approximately $175 million based on a 13% effective tax rate, and diluted share count to be approximately 1.62 billion shares. For the full year, we expect revenue to be approximately $23.5 billion, plus or minus $300 million, an increase of approximately 43%, led by growth in the embedded and data center segments. We expect non-GAAP gross margin to be approximately 52%. In closing, we continue to focus on executing our long-term strategy while navigating current market conditions. We will prioritize the key investments for our product roadmaps and long-term growth while taking several near-term cost management actions, including prudently controlling operating expenses and headcount growth while actively managing inventory in line with our revenue expectations. With that, let me turn the call over to Ruth for our Q&A session. Ruth?
Thank you, Devinder. Kevin, if you could please poll the audience for questions.
Certainly. We'll now be conducting a question and answer session. If you'd like to be placed in the question queue, please press star one on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star two if you'd like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing star one. One moment, please, while we poll for questions. Our first question today is coming from Aaron Rakers from Wells Fargo. Your line is now live.
Yeah, thanks for taking the question. I have one question and one quick follow-up. I guess as we look at your client piece of the business being down sequentially in the current quarter, as we work through inventory digestion at your customers, I'm curious to just how you're thinking about kind of the the clearing out of that inventory? Do you think we find a bottom coming out of the December quarter, or any kind of thoughts of just that kind of full expectation of a flushing of inventory in the PC market for you guys?
Yeah, sure, Aaron. Thanks for the question. So, clearly the PC business has, been very volatile and underperformed for us in the third quarter. I think as we go into the fourth quarter, we are guiding that embedded in our guidance is that PCs will be down again in the fourth quarter. We believe that that will be a significant step in clearing inventory between the third quarter and the fourth quarter. And, of course, we'll monitor the macro conditions, but we'll certainly exit the year in a better place.
Yeah. And then as a quick follow-up on the server side of the business, I think in the past you've talked about your ability to ship being somewhat, supply constrained. I'm just curious if you have an update, on the supply situation in the server CPU, especially as we look towards the Genoa processor ramp in the next quarter or two.
Yeah, sure. So, on the server side, we certainly have been ramping up our overall supply. I think we've made good progress on that. Throughout the year, we have more supply in Q4 than we had earlier in the year, and some of those investments are coming online here in the fourth quarter. So we expect, as we go into 2023, with the Genoa launch, not to be supply constrained based on what we currently see.
Yep, fair enough. Thank you.
Thanks.
Thank you. Next question is coming from Toshiya Hari from Goldman Sachs. Your line is now live.
Thanks so much for taking the question. Lisa, I wanted to ask a question on the outlook for 2023, specifically in the server CPU business. I know it's early and difficult to predict, but given the supply comment that you just made, given what you're hearing from customers both on the cloud side as well as the enterprise side and the ramp of your new products, how are you thinking about the positives there versus the macro, which continues to be a headwind? I think many of us have your business growing in data center kind of in the 20 to 30% range. Is that a fair place to be, or is that a little too optimistic given what you know today?
Yeah, so it is a little bit early to talk about 2023 precisely, but maybe let me give you a backdrop of where we see the data center market today. And as you said, in the near term there are some overall macro headwinds that are affecting all markets, including the data center market. Now it varies by segment, and so if I go through each of the segments, what we're seeing is I think North America Cloud is probably the most resilient out of the segments within the data center market, and this is where AMD is the strongest. We've had very good progress at the North America Cloud vendors, and we continue to believe that although there may be some near-term, let's call it optimization of let's call it individual footprints and efficiencies at individual cloud vendors, over the medium term as we go into 2023, we expect growth in that market, particularly customers moving more workloads to AMD, just given the strength of our product portfolio and overall Genoa coming forward. As we look through the other segments, I think China has been very weak in 2022, and we're not forecasting a significant recovery in 2023. So we'll see how that goes. And then on the enterprise side, I would say enterprise is probably most impacted by the macro. So we have seen customers taking longer to make decisions and perhaps being a little bit more conservative on CapEx. That being said, though, we feel very good about our value proposition. We feel very good about our product portfolio, and we believe even in a little bit of a choppy market that we can gain share across that business. So overall, I think our data center trends are good, and we need to work through the macro as everyone does.
That's helpful. And then as my follow-up, a question on gross margins, maybe for Devinder. So you're guiding Q4 gross margins up about 100 basis points, which is good to see, but you're still 300 basis points below where you were in Q2. And since then, obviously, client is down significantly. Your data center business is very resilient, and so is the classic Xilinx business. So from a mix perspective, you should be in a better place. What's driving down gross margins in Q4, I guess, versus Q2? Are you recognizing another inventory hit, or is it something else? Thank you.
No inventory hit. First of all, Toshi, on the gross margin, as you said, Q2, 54%. If you go all the way to Q4, 51%, primarily is the weak PC market and client margins coming down. For example, if you look at Q3, all other businesses were in line with expectations and client margins came in lower. We also have in the data center a place cloud weightage, which has lower ASPs. So that also has an impact on margins. And then, as Lisa mentioned earlier, some of the new capacity that we have from a supply standpoint, there are some additional costs from the supply capacity agreements, and those are all baked in into the Q4 51% margin guidance.
Thank you.
Thank you. Next question is coming from Stacy Rasgon from Bernstein Research. Your line is now live.
Hi, guys. Thanks for taking my questions. For the first one, I wanted to ask about the extra week in Q4. How much revenue is that driving on an overall basis, as well as in data center specifically? I don't know how linear that is, particularly that business is. Is there any material impact from that extra week?
Yeah, Stacy, we're not really counting on a material impact from the extra week. I think if you look at the pluses and minuses in the quarter, the guidance for Q4 really is around, sort of PCs and let's call it gaming being lower. And, again, those are, with all the holidays in place, we're not counting on too much there. And then, data center embedded are higher, but we're not expecting that the extra week has a material impact.
Got it. Thank you. For my follow-up, I want to ask about units versus pricing in Q3 and Q4. I know in Q3 you specifically mentioned pricing as an impact, and it sounds like you're suggesting client margins are coming down. I don't know if that's just a cost or if there's a pricing impact as well. But what did units and pricing do in client in Q3, and what are you expecting into Q4?
Yeah, sure, Stacey. So I think if you look at the third quarter, it was there are a lot of dynamics in the client business. So market was weak. In particular, consumer was weak, and we have more of a footprint in consumer. So in that framework, we saw units come down, but we also saw ASPs come down on a sequential basis. Now, I will say that ASPs were still up on a year-over-year basis. So we've been let's call it disciplined in this pricing environment. We did see some pricing dynamics in the quarter, and we didn't chase unprofitable business, and we'll continue to be sort of watching that space. So that was the pluses or minuses as it relates to client ASPs. And as we go into the fourth quarter, again, I think we're forecasting for a competitive environment given the market weakness, and that's embedded in the guide.
Got it. That's helpful. Thank you, guys.
Thank you. Next question is coming from Vivek Arya from Bank of America. Your line is now live.
Thanks for taking my question. For the first one, I just wanted to clarify, what is the client revenue we should be thinking about for Q4? Is it $800 million, $900 million? Any help there? And I guess, Lisa, the bigger question there is, what does client recovery look like? Do you get back to the $2 billion quarterly rate? Do you get to $1.5 billion? And I ask that because your competitor was suggesting that next year the PC TAM would only be down 4 or 5%. Which seems a little bit optimistic. What do you think AMD is kind of, what kind of PC TAM does AMD have in mind for next year, so that we get a sense for how de-risked the model is from a PC perspective?
Yeah, so a couple of different points, Vivek. Let me just answer the sort of the expectations around Q4. I would say we're guiding, let's call it modestly down for client and gaming, and obviously we're coming off of what is already a low base in Q3. We want to do that to correct the sort of the inventory situation as quickly as possible, and as a result, we're going to undership consumption again in the fourth quarter to do that. As it relates to next year, I think there are a lot of factors. I mean, this year PCs will be down quite a bit. Let's call it, high teens, close to 20%. As we go into next year, I think the industry is calling mid-single digits. I think that would be a good case. I think we should model down to minus 10%. And, again, within our PC business, we expect as we get through this inventory correction, I mean, we have very good products, and I feel, very good about our product portfolio and very good about our platforms overall. So I do think the PC business, will recover as we go into 2023, but we'll have to work through these dynamics over the next quarter or so.
Understood. And for my follow-up, Devinder, maybe one for you on gross margins. How much of the write-offs and pricing actions that you're taking that you took in Q3 and are taking in Q4, how much are they recoverable in Q1? So let's say hypothetically Q1 revenue is the same as Q4 revenue. What can gross margins be? How much of the actions are recoverable? And basically, how do you start getting back to the prior trend of 54% gross margin, because the longer term target is over 57. So if client revenues don't really grow that much, are there actions that can help you get back to your prior gross margin trajectory? Thank you.
Let me try to answer it this way. If you look at Q3 in and of itself, we came in with about 50% gross margin. We had $160 million of charges, which are inventory pricing and related charges. If you adjust for those, the margin in Q3 is about 52%. And, we had guided to 54, we came in at 52, and primarily that's due to, two reasons, right? You have the client weak PC market, and obviously the client margins are down. As I said earlier, the rest of the business will perform per the expectations. We have to work through what's going on with the PC market over this quarter, next quarter, and maybe early 23, and then we come back and talk about the margins. I do feel good about the products we're introducing, especially the new products, and have the ability to increase margins from where we are right now, guiding 51%, and then taking it up from there.
But is the $160 million recoverable? I guess that's really my question.
Those were mostly, inventory write-off pricing actions we take. Largely, I would say not recoverable, if that's what you're asking.
I mean, can you get back to this 52 that you would have been normalized? Like, I expect if you don't take these actions in Q1, then should you be at a higher gross margin in Q1 versus Q4?
I won't guide Q1, but what I'll say is from the 51% that we have in Q4, we can improve from there.
Thank you.
Thank you. Next question is coming from Matt Ramsey from Cowen. Your line is now live.
Thank you very much. Good afternoon. Lisa, I have one question on the data center segment and then a follow-up on client. On the data center business, if you look back to the pre-announcement a month ago, I think there was a little bit of you came in a little bit under where we were modeling, I'll just say that way. And so I got a ton of questions on that, and I was really interested in some of the comments that you made in your script about how cloud revenue still more than doubled year over year. And anyway, just confirming that I got that right. And maybe if you could help us break down your data center business a little bit between the strength in cloud that I would expect to continue given the CapEx commentary we've heard, but there were obviously some headwinds from enterprise that you called out and clearly from HPC, both on CPU and GPU. So I think that would be helpful to just break it down because I was surprised that cloud revenue was as strong as it was given where the numbers came in the quarter. Thank you.
Yeah, sure, Matt. So, so if we're focused on the third quarter, what I would say is, cloud revenue did more than double. Enterprise revenue was down. And then on the GPU side, because we had a strong quarter in the third quarter of 2021, that was down too, and perhaps that wasn't quite in your modeling. But the larger dynamics are, as I said earlier, the North America cloud is probably the best out of all the data center segments. There is some impact on macro though. I mean, I think everyone is aware of that there is there is a little bit of pullback in CapEx spending. That being the case, I think our market share is very good there, and we expect it to continue to grow. And as the business becomes more cloud weighted, there have been a few margin questions. So I'll just mention, as the business becomes more cloud weighted, that tends to have a little bit of downward pressure on the margin. But, our goal right now is footprint and expanding our footprint across cloud and enterprise. I will say, even in a weak enterprise market, as we go forward over the next few quarters, we feel really good about how we're positioned and the platform solutions that are coming out with all of our, OEM partners. So, I think on a quarter-by-quarter basis, you may not get the model exactly right, but I think on a longer-term basis, I think the product portfolio and the product capabilities, should help us continue to gain share.
Thank you, Lisa. That's helpful. I think just to highlight the cloud momentum continuing. I guess as my follow-up, I wanted to kind of revisit what we've learned over the last 3 or 4 months in the PC market. It's super dynamic times out there, and obviously things have changed in demand really, really quickly from when you guys guided back at the beginning of August until the pre-announcement. And I just kind of wanted to walk back through sort of the dynamics of how the quarter progressed from when you guys gave the original guidance. I guess obviously the market went down, there was inventory corrections and whatnot, but just how quickly did you guys see that? And I guess the real question coming out of this is, how are you thinking about changes you might make in monitoring inventory levels or working with your channel partners? Just any changes you're thinking about making and operationally to the business to sort of protect from this kind of thing and coming in, I guess, going forward. Thanks very much. Any color there would be really helpful.
Sure, Matt. So, yes, the third quarter, the PC market was very volatile. Going into it, we expected the market would be weak. It was weaker than we expected. And, the weakest portion of the market is the consumer market, where we tend to be more heavily weighted. I think the thing that perhaps, we saw in the market is we all, as the overall macro, economy has also weakened, customers in general across the board have just become more cautious. So even as they were selling through their inventory, they were not replenishing stock to the same levels. And frankly, we were coming off of a supply-demand imbalance where in the first half of the year, people were actually trying to gather inventory because we had been in a supply-constrained situation. So it is a very dynamic situation, I would say. I think that we have great partnerships across the supply chain. I feel good about the visibility that we have. I think the market will continue to be volatile, but we're all, sort of biased towards, reducing inventory levels so that, we can better react to the market factors and the market situation. So hopefully that helps a little bit.
No, definitely appreciate that, Lisa.
Thank you. Next question today is coming from Joe Moore from Morgan Stanley. Your line is now live.
Great, thank you. I wonder if you could talk a little bit about your visibility in the Xilinx part of the business, to the extent that we've seen some weakening in kind of broader markets here and there, but generally it's okay. Like, can you just talk about how long your visibility extends there and how you feel about growth into next year?
Yeah, absolutely, Joe. So, the Xilinx business, or our embedded business, has been performing just extremely well. Another very strong quarter in Q3, and we have, we see growth into the fourth quarter. We have been, very focused on what's happening within the various subsegments. I think the nice part of the business, as you know, is that it's very broad-based. So, we have seen, communications was up for us, aerospace and defense, very strong. Automotive was also up for us here in the third quarter. We did see some, weaknesses. Consumer was weak. There was some subsegments of industrials. So test and measurement was weaker in the third quarter. So we do see, the puts and takes there. But overall, I would say, the business has strong visibility. We're still supply constrained in certain nodes and some of the legacy nodes. We've made a lot of progress on supply, so we're seeing additional supply come in Q4. And that leads us to, good confidence in Q4. We expect the first half, again, we have multiple quarters of visibility just given the lead times in that business. And, we'll be watching it very carefully. But I would say, overall, the products portfolio is strong, and we've also gained some share in that business as well.
Great. Thank you very much.
Thanks.
Thank you. Next question today is coming from Ross Seymour from Deutsche Bank. Your line is now live.
Hey, everybody. Thanks for letting me ask a couple questions quickly here. Lisa, if you could give us a little color. You talked about the fourth quarter being, I guess, down modestly in client and gaming. Can you give relatively similar color for data center and embedded, just because the volatility between segments obviously has been huge over the last couple quarters?
Yeah, sure, Ross. Well, since on a absolute level, we're talking about flattish from Q4 to Q3. 555 versus the 556. So, modest decline in client and gaming. Within gaming, we would expect consoles to be down in the fourth quarter, given they're coming off of Q3, which is their peak. That's offset a bit by our new graphics launch that is occurring in the next few weeks. And then as it relates to data center and embedded, it's about the same. Let's call it modest plus as we go forward. We expect, again, cloud to be stronger than enterprise. That's some of the margin dynamics that we were asking earlier. And, embedded as we get more supply, modestly up as well.
Great, that's perfect. And then as my follow-up, one for either you or Devinder, and as we think about OpEx for next year, how do you guys philosophically balance the desire to stick to your business model that you laid out at your most recent Analyst Day versus the desire to continue to spend, continue to gain market share, put out the great new products, and execute that you've done so well? Are those kind of buffers conflicting against each other, and how, if so, do you reconcile that confliction?
Yeah, I think the key thing is, we continue to invest in the strategic areas in data center and embedded and the product roadmaps. The macro environment has weakened, there's softness to PCs, and we are taking actions to reduce expenses, especially in the rest of the business, besides what I talked about earlier in terms of the areas of focus. And we have slowed down hiring. So you're right, Q4, if you look at an E to R basis is high, but we are very disciplined in terms of what we're going to do. Expense actions do take time to kick in, and we expect as we go out into 2023, the E to R comes more in balance with the revenue, and we manage it in line with the revenue out in time.
Yeah, and maybe, Ross, if I just add on top of that, I think we have the opportunity. We have multiple levers in OpEx, so we are going to be very disciplined, as Devinder said. That being the case, we feel very good about our strategic direction around data center, embedded, and the commercial markets. So we want to continue to invest there, where we will be more conservative on the consumer-facing portions of our business, and that's how we'll manage through 2023.
Thank you. Next question is coming from Ambrish Srivastava from BMO. Your line is now live.
Hi, thank you very much. Lisa, I wanted to come back to the PC, PC business. There's such a big disparity between your 3Q guide and what Intel guided to or reported versus what they're guiding to in 4Q. And usually, things normalize over a longer period of time. But I just wanted to understand, is it a case of they took their medicine earlier and AMD continued to overship versus demand? Just kind of help us understand. And there seems to be also a dynamic that in 4Q, so there was some pull-in ahead of that. And I've been getting a lot of questions myself. I don't understand such a big disparity. So any help would be very helpful.
Yeah, sure, Ambrish. Look, I think, again, let me comment on our business, right? So for our business, as we exited the first half of the year, I think we were planning for a sort of a reasonable PC market in the second half. Usually the third quarter is higher than the first half, and the third and the fourth quarter are seasonally higher. And so that's what we were building to, together with our customers, by the way, with that expectation. I think the market weakness, as well as just the overall caution in the environment, just caused people to behave a bit differently, and that really required us to work together with our customers on the inventory corrections. And as you said, there were some temporal sort of dynamics, and we're aware of those temporal dynamics. Some of it is very sort of very aggressive pricing that, we chose not to follow. And, again, that's a decision that we made. And, others are, as you might expect, there might be some, temporal optimization that people are doing. I don't think there's anything fundamental. I think fundamentally our product portfolio is strong. I think we have a very, good platforms in place, and, we'll work through this. I fully agree that it's kind of a messy, market environment that we have to work through, but we will work through it.
Got it. Good. Thank you. And I had a follow-up for you, Devinder. Just talk about capacity opening up at the foundries. And we had this conversation at the Analyst Day about the headwind to free cash flow, given your need or desire to secure capacity. Is that going to taper off as we go through the remainder of the next few quarters, as there should be more capacity that's available? Plus, on the PC side, you should need much less than what you needed a couple of quarters ago. Thank you.
Yeah, I mean, the capacity agreements that we were working on, which, have some benefit, especially as Lisa talked about earlier in the server space, these are long-term agreements we put in place to support the growth of the business. Given the market backdrop, we work actively with our suppliers in aligning supply with timing of revenue and ramp up products. And that's something that we are able to do with our suppliers, given what's happened in the market. So there is, from that standpoint, some flexibility overall, and that's something we'll work through over the next 2 to 3 quarters.
Thank you. Next question is coming from Harlan Sur from JP Morgan. Your line is now live.
Good afternoon. Thanks for taking my question. In data center, the team continues to expand the number of compute instances with your cloud customers on Milan. Seems like the momentum is carrying up and through the ramp of your 4th generation Genoa platforms. I think this is a very good dynamic. I assume you guys have good visibility here. So how long does the Milan momentum continue into next year? And are your cloud customers already qualifying Genoa? And when do you expect Genoa to start to kick into high volume ramp?
Yeah, thanks for the question, Harlan. So, yes, look, we're very happy with our Milan, sort of workload ramp. We are continuing to ramp Milan here this year and then into next year as well. As it relates to Genoa, we did start initial shipments of Genoa to our strategic customers in the 3rd quarter. That is continuing in the 4th quarter, so we're ramping production in the 4th quarter. A lot of the, let's call it the qualifications or the first instances are being qualified here in the 4th quarter into the 1st quarter. And what we've said before is that, Milan and Genoa are going to actually coexist for quite some time, just given, how competitive, both are. Genoa is a new platform. It is new DDR5 and PCIe 5, and that takes a bit longer for people to qualify. And so we would expect both to continue to ramp in 2023. And that's how we're planning the business.
Great, thank you. And despite the macro concerns, and as you mentioned, some near-term workload optimization, your North American cloud customers, they're still growing their cloud services business at a strong 30, 40% year-over-year growth rate. And I assume at these types of growth rates, like the consumption of compute, networking, storage workloads, and therefore installed utilization, like this is all quite strong and driving the need to build out more compute capacity. Is this what's driving the team's sort of strong midterm outlook for this segment, or is it more a function of your strong product lineup with Genoa and continuing to capture greater compute share, or both?
Yeah, right, Harlan. I would say it's a little bit of both, and I think you said it well. In the very near term, there is a little bit of optimization that each cloud vendor is doing, but in the medium term, what our customers are telling us is they need more compute. And the more compute is for additional workloads building out. It's also for upgrade of, let's call it, older compute. Given our new products have very strong TCO, power efficiency, given the cost of power and energy around the world, we're actually seeing that also be a driver for some of the conversion to AMD in the cloud as we go into 2023.
Thank you, Lisa.
Thanks, Harlan.
Thank you. Next question is coming from Chris Danely from Citi. Your line is now live.
Hey, thanks, gang. So if we take the macro out of it, can you just go through your share expectations in desktop, notebook, and server, let's just say for the next 12 months or so?
Let's see, I'm trying to think, how do I take the macro out of it? So your question is, put the actual TAM aside and just talk about where we're going from a share standpoint. Is that your question?
Yeah, you can say relatively where you expect to gain more or less.
I got it. Okay. Yeah, I want to be responsive to the question. Well, let's start with the data center. I think in the data center, we believe that we will continue to gain share. We expect to continue to gain share in both cloud and enterprise. We are more underrepresented in enterprise, and so again, that's a key focus for us. But as we just stated in the last few questions, I think North America Cloud in particular, I think we see line of sight to significant new deployments based on our current roadmap. In the desktop and notebook business, our focus is on certain segments. So we're very focused on premium, we're very focused on gaming, and we're focused on commercial. I think in those areas there are again, opportunities for us to, continue to gain share. I think in desktop DIY business or, sort of the desktop channel business, we have a strong lineup. We just launched the new Ryzen 7000 series. We have additional products that will launch next year as well. And, that's sort of the puts and takes in the various businesses.
Sure. And then as my follow-up, I guess just getting back into the macro. So you mentioned that, ASPs are getting a little, or at least pricing is getting a little tough in CPUs. If this downturn in PCs continues into next year, and if it spreads into the data center market, how do you think of pricing going forward? And would you choose to maybe give up some share if your competitor, remains aggressive on price and the environment stays difficult?
Chris, I think where we have a very strong value proposition, our strategy is not to lead on price. So if you look in the data center, although price is one factor, we find price is not the leading factor in the majority of the selections. There is work for us to do in terms of workload optimization, and that's where a lot of our focus has been. In the data center. So, hopefully that answers that piece. As it relates to the PC business, it is more price sensitive. We have seen it become more price sensitive. I think, again, where we have a strong value proposition, we will continue to be very competitive. But even back, a year ago, we didn't choose to compete in the Chrome market because, again, that was just not profitable business for us. And so we're going to be disciplined in ensuring that what we're taking is profitable business.
Got it. Thanks, Lisa.
Thank you.
Thank you. Next question is coming from Timothy Arcuri from UBS. Your line is now live.
Hi, thanks a lot. I had two. Lisa, first, I wanted to ask about U.S.-China trade. And I guess the recent restrictions, they didn't seem to have too much direct impact on you, but the direction of travel seems pretty clear. And you report China as 25% of revenue, but that's sell-in. So I'm wondering if maybe you can help us with what China is on a consumption basis and kind of how you handicap where your China TAM is going. When you're making these investment decisions, how do you think about the U.S.-China trade and the direction of travel? And then I had a follow-up too. Thanks.
Yeah, sure, Tim. So we are certainly watching the situation, very closely. Upon reviewing all of the new regulations as they have gone into effect, it is minimal impact on our revenue in the near term. We're certainly working, very closely with, Commerce and the rest of the U.S. government on how those are rolling out. And then I think on a medium-term basis, again, my view on these things is we will always follow the U.S. regulations and understand, the need for national security. The majority of our China business is, let's call it, non-data center. So it is more, in the PC business as well as, in some of the the consumer-facing businesses. So, we are paying attention to that as we go forward in the business, but for the near term, we have not seen any significant impacts, and we'll continue to follow it very closely.
Thanks a lot, Lisa. And then I guess I wanted to ask a question about PCs. So you guided in late July, and it seemed like things were fine, and then we lost basically $1 billion basically in 2 months. It would seem like those were massively weak months, and I would think that maybe there's been some improvement in the run rate when you kind of headed to Q4. Does that mean the inventory is sort of leaned out a little bit? I mean, the market probably only absorbed, 50 million units in Q3, and you annualize that, you're at 200 million units a year. It's like hard to get PCs that bad next year. So I'm just kind of wondering if you can comment on sort of the run rate, because August and September must have been terrible months. Thanks.
The PC market certainly was volatile in the third quarter. I would say that we did drain a good amount of inventory in the third quarter. I think we are, our guide indicates a desire to drain more in the fourth quarter. And, I think we will make progress in that. And, of course, it all depends on how the macro behaves over the next couple of months. But, like I said, I think we have good visibility into the various, market factors, and we're planning for a weaker PC environment in the fourth quarter.
Thanks, Tim. Operator, we'll take 2 more questions, please.
Certainly. Our next question is coming from Blaine Curtis from Barclays. Your line is now live.
Hey, thanks for taking my question. I want to go back to just the pricing question prior. If you look at the decline in your client business, a little over 50%, is there a way to think about units versus pricing there? And I think there's a couple of factors too. I'd be curious your thoughts, mix away from the high end, but then you mentioned competition, just kind of your thoughts as to that impact to pricing as well.
Yeah. So, Blaine, it was certainly more units. I think Stacy asked the question earlier. ASPs were down sequentially, but they were up year over year. So, the decline was more driven by units, but there was an ASP factor on a sequential basis. And then in terms of, what we see in the market, I would say that as the market weakened, there was, sort of more pressure at the high end in terms of just, velocity and, desire to clear inventory. And so, the mix, did mix, towards, lower ASPs and towards, more, more incentives to clear that inventory. As it relates to, longer term, though, I don't feel like there's a longer term, significant mix change, if that's what you were asking.
Well, I guess the second part, maybe I'll ask the second part, is gross margins are down 100 basis points from Q3 to Q4. Mix is kind of going in your favor with data center and embedded. But then I guess you're saying PCs are not down that much, so I guess I was figuring maybe pricing is not that bad either. So I guess that's a long way of asking, again, what's the reason for the core margins to be down 100 basis points from Q3 to Q4?
Yeah. Okay. So let me try that. So if you think about what we see in the business, there's a couple of factors. So if you say, excluding the charges that we described, the $160 million in Q3, we were about 52%. We're guiding to 51%. We do see the client market continuing to be weak. We want to make sure that we do clear additional inventories. We do see in data center a mix to, when the mix is higher for North America Cloud, that tends to be lower ASPs, just given, the environment in that business. And then Devinder mentioned that as we increase capacity, particularly in the server market, there were some, we have some additional capacity coming online, and that has a bit of cost impact. So those are the couple of factors that get you to the 51%.
Thanks.
Sure.
Thank you. Our final question today is coming from Harsh Kumar from Piper Sandler. Your line is now live.
Yeah. Hey, guys. First of all, thanks for squeezing me in. Lisa, I had a question of the near term, to call it midterm view of the data center market. Do you think that the data center market is inherently growing in the December quarter? The market, not AMD. And do you think and/or do you think you're growing because you're launching Genoa? And to that point, you talked about dislocations in sort of the cloud and the data center market. I was curious, what specifically are you seeing? And if you could differentiate between, are you seeing just slower growth, or is there inventory that's built up? And then I've got a follow-up.
Yeah. So look, what I would say is, again, on a very discrete basis, I wouldn't say the overall data center market is necessarily up, just given the macro impact. There is some impact on overall spending. In terms of our business, we do have a weighting towards North America cloud that tends to be, sort of the most resilient part of the market. And then as it relates to what's happening in the market, like I said, I think what's happening is, enterprise is weak. I think that is, overall businesses are just being more cautious. China is weak and has been weak all year. And then in cloud in general, every customer is a bit different in what they're trying to do. Some are just optimizing inventory, some are optimizing footprint, and then some are continuing to build. And so I wouldn't call it a market per se. I would call it their individual instances for each customer. What's helpful for us is what we're talking about is not just Q4 with our customers. We're really talking about what do they need for all of 2023. I mean, we are coming from a place where we were supply constrained, and so we're planning for the capacity that's necessary. And there we see which workloads are moving and when are they moving each of the workloads, and so that gives us some visibility into what their spending plans are for 2023.
Very helpful, Lisa. And then for my last follow-up, can you talk about the gaming market in general? Of course, September you mentioned was the peak quarter, so December will be off some. But is this also the peak gaming year in 2022? And should we be thinking that gaming will be down, or just because these things are still so hard to get, you try to go buy a PS5, you still can get your hands on it easily? So do you think there's more legs left to the growth next year?
Yeah, so Harsh, we do believe that there is still some pent-up demand, especially coming into this holiday season. So, Q3 was the peak for us this year. Q4 is down seasonally, as you might expect. Going into next year, I think there are puts and takes. I would say, the best way to model at this point is to model, gaming segment flattish. And, let's see how the holiday season goes. But, that would be the way we would call it at this point.
Thank you. We've reached the end of our question and answer session. I'd like to turn the floor back over for any further closing comments.
Thanks, Kevin. Thank you, everybody, for tuning in today. And we'll look forward to connecting with you all throughout the quarter. And we have 2 important product launches coming up here in the next 10 days. So we'll look forward to that engagement. Thanks, everyone. This concludes the call.
Okay, team. So that is it for today. Real quick, if you guys want to help support our free content here, thank you guys so much. We did break 90,000 subscribers today. We're up to 90 plus thousand, 9,042 subscribers today on the stream. So thank you guys so much. We truly do appreciate it. Like I said, if you want to join us tomorrow morning, we do have the Fed meeting tomorrow morning. We are going to be streaming that live here as we always do. So y'all be sure to join us live. Let me know what you guys think the Fed is going to do for their Fed rate hike decision. We're going to stream tomorrow morning. We're going to stream the Fed FOMC rate hike decision. We're going to stream the press conference completely live for free right here. You'll be able to watch everything. Also, one of the ways I trade every day is I trade the TradingView indicator service Chart Prime. They are a sponsor of my video, but if you just look at how accurate these things can be, they're really, really powerful. Okay, so like look at this, just for instance, possible reversal down, drop, possible reversal down, drop, possible reversal up, bounce, possible reversal down, drop, possible reversal up, bounce. And you can use these all the time. You can also just simply use them, the candlestick indicators. Look, bearish engulfing, drop, bullish engulfing. We get a little bit of a bounce, and I can keep using these. There's a ton of powerful ways to use this service. You can use the promo code BTRADE, get 20% off. They are a sponsor of mine. If you want to help support the channel, you can check them out as well. Here is the link for that. And yeah, we'll see you guys a little bit later. Good luck. We'll see you guys tomorrow morning, bright and early. So y'all stay safe in the market, guys. And yeah, we'll see. Yeah, everywhere is not free. Most people try to sell you a course on stuff. So again, we stream it all. I mean, listen, you don't have to watch it. It's all good. If you're going to complain about free, hey, cheers to you guys. We'll see you guys later. Love you all. Thank you guys so much for helping me hit 90K. It really means a lot. Again, we put out only free stock market content. So we broke 90,000 subscribers today. We might break 100K by the end of the year. We might not. But hey, thank you for the thousands of people that joined us today. Thank you so much. Have a good day, guys.